My little girl. Hello, dear traders. You see, I'm evolving as a trader. Every day I learn something new, and I would like to share this to repeat the stop rate game video that I made earlier because I've learned some new things, and whenever I learn something new, I want to share it so that the community of traders can go through what I've done and help me to continue to grow. That's my aim. That's my aim. So I'm going to repeat the same pair, try to find where stop rates happened and what it means, and use that to determine the future direction of the price. In fact, Euro USD is the pair that I really like. Yeah, so I'm going to repeat this. Let me start here. So the week of 26th, sorry. So what I'm going to do is to find stop rates, weekly stop rates. And then I'll prepare another tutorial in which I'll mark intraday stop rates. See, so I want to know if this happened. I mean, what happened? How does what happened this week show us what will happen the next week? That's what I'm trying to do in this tutorial. If you want to know what happened, how to use this stop rate game in intraday trading, I'll come up with another tutorial addressing that. But in this one, I'm just going to do weekly, because if you master the weekly stop rates, it will help you to get a bigger perspective of the whole week. That's why I'm making this, and then I'll hold on for some days. I'll come up with another tutorial which shows intraday stop rates, because they are there also. Yeah, that is what the market makers do all the time. So I'll start here. This is where the week ended here. This is where the week ended. The week of 26th of August. This is where it ended. This was the swing high, and this was the swing low. Now I want to see what will happen in the new week. If price clears this swing high here, that will mean that the coming week probably will be a bearish week to some extent, because we don't want to catch the whole move, as I said earlier, but we want to take trades which make sense in terms of the anti-signals and in terms of number of pips that we harvest in the market. So let me move forward and see what happened. The price right now is closer to this swing high. Let us see what will happen as the week progresses. F12. Okay. This swing high has been taken out. Here. This swing high has been taken out. And for those of you who have done Inner Circle Trader training, this is another block. So probably the coming week will be a bearish week. Where will price go? I think we have the whole of this region here. Yeah, we have the whole of this region. I think the price will come because I see inefficiency in this area. Price jumped up, and the market makers do not like that. Market makers would like to be able to place trades when price, at the point where price is not very different. So whenever you see big gaps in price like these ones, it is very likely for market makers to bring price down and push it up again. So we have this gap here as a possible as a possible area which will be covered by price during the new week, because these people here are already off. Let me see. Otherwise, we'll see what happens. But that is the most possible scenario here. We have this huge gap here, which market makers do not like, and this stock has been taken out. Let us see what happened. Down we go, down we go, down we go, down we go, down we go. Yeah, that was the right call again. Thank God for that. And they saw our stop, our take profit. If we had taken this trade, our take profit would have been, this would be a reasonable place for me to take profit. And let me go to 15-minute time frame and try to determine how I might have entered in this one. Just a moment, please. And again, I want to reiterate that I'm not lecturing anyone. I'm just sharing what I know, because, well, really, if you say what you know, you'll invite people to question you, to bombard you with questions, and then you'll continue to grow. I thank people for watching my videos, but I don't see any questions. I don't see any questions. I don't see any comments. Please ask questions. I'm a very new trader. If you don't ask me questions and bombard me, I will not develop. Please ask questions. Ask as many questions as possible, and we'll discuss them. We'll address the questions together. We are working as a team. Please let me and you form a winning team, please. Let me and you form a winning team. Please ask questions in the comment section. Likes, well, I really don't really need likes, although it will also encourage me if people put some like because, well, people, as you like the video and share it, more people will continue to learn. So I would appreciate questions instead of likes. Of course, I'm a new YouTuber. I'm still learning what it means when people like your video. But what I would prefer for now is questions. Please, questions, bombardment. That's what I want. That will what will help me to grow. Please keep the questions coming. The date was when here, 26th of August. Let me see what happened on the 26th of August. 26th of August was here. Yeah, look at this, people. Well, it was a sweet trade for sure. Here, this was 9:30. Yeah, because you already know that. I normally wake up at 8 o'clock. GMT plus 3 is my time. At 8 is when I wake up, I would check my chart and find out that they have already hunted stops here. This candle here. This candle will show me that stops have been raided. See, this would show me, because I already knew, as I told you, as I showed you here. Yeah, I already knew that if this stop is cleared, I told you about this gap here, didn't I? I told you about this gap, because market makers don't like huge candles like this one. I told you that it is very likely that they would come down to cover this gap before going wherever they want to go. So we already have that in mind. And I think that is why for a novice trader, it's important to have few pairs, to work with few pairs, because it is easier for you to monitor. Well, that is your own, should have a plan for that. So by 8 o'clock GMT plus 3, when I wake up here, I see this and I say, oh God, I thank you, because now I am sure that this is going to be a sell day. See what happened. See what happened. And in fact, let me look at this. Based on this, okay, this is a, well, I thought it is a gap, but I don't see it. Of course, I'm still new in seeing what we call fair value gaps. So as I continue to learn, I will continue to bring videos to you people, because I want us to grow together. So this is what happened, you would say. So having seen this trend, then I would draw a line here, and then I would wait to see when price touches this line. I wouldn't wait for anything else. Here, I would sell right away, because I would draw a line here. Yeah, this is where I'll put my line here, and then when price comes up and touches the line, I just sell, because I know they are not coming up. So I would sell and put my stop loss here. How many pips? 12 pips. And my take profit will be down here, as I've showed you. Very simple. You just need to keep your eyes open. Okay, so that is so that will give us how many pips? Okay, me F12. That will give you around how many pips? 38 pips, 40 pips. This week, the week of 22nd of August, was not a very wide week as far as Euro USD is concerned, because when the range was 104 pips in total. Well, that is wide. That is wide. But then, if you sell here and take profit here, well, you already have 44 pips, very assured pips. Because after stop rates, we know that market makers will change direction. So you take this, and then you would continue to look for intraday stop rates. So after this sure move, which I would call a weekly move, you would then continue to look for intraday stop rates. I've told you that I'll come up with an intraday stop rates later, not today. I'll come up with that later. So you have 44 pips already. You go down to 15 minutes, you look for intraday stop rates. You will continue to make money. Let me show you an example. Just an example, but I'll come with more details in the video that I'll do that. An example of intraday setups would be this one. Let me show you. You have this high of Monday, and you have this low here. You have this low. This is low of Monday. Simply, you just look for price to breach, to clear people out of the market in any of these lines. That's all you do. Let us see. This one is an example. Let us see what happened on Tuesday. Push forward, push forward, push forward, push forward. They have decided not to. What happened here? Okay, so they decided not to write stops or what? Let me see. Okay, so the the low of Monday is still intact. It is still intact. Okay, it has been breached. It has been breached. What is the time? The time is 17 o'clock in the evening. The low these people have been cleared out. These people here, they have been cleared out, and also these people here. So quite a lot of people have been pushed off the market here. So at 17 o'clock, then you know this is deep into New York. My time is GMT +3. Having seen that, you know that they will go up for sure. You know that it's going to be a buy day. Yeah, so that is an example of intraday trade setup. They've cleared here. You look to buy. In fact, even this was a sell, because although it would be a minor sell, because if you would watch here, at 10 o'clock in the morning, GMT +3, right when London starts, you see them breaching these are stops here. These are stops. These are stops. You would see them breached. And once they breach these highs here, you know for sure that it's going to be a sell. The next thing now is to determine how far the sell will go. See, so at London, when they breach this, you already know that it's going to be a sell. In fact, this is also another intraday stop rate. This one here. Let me show you. This one is an intraday stop rate, which you would use to enter this trade, which I would call a weekly setup. Here, you wake up at 8. I wake up at 8 o'clock in the morning. Here, because I already have this stop here is I would call it rather a weekly stop rate, and then I see equal highs here. These equal highs are an indication to me that if they are raided, it is another indication that we are going down. You already have a stop hunt here, but you don't enter right away. You don't enter right away. You wait until when the raid stops again, and it is set to you here on a plate really, because let me show you. According to my time, GMT +3, I would wake up at say 7. I wake up at 7. I check the charts. I discover that we have equal highs here. We have equal highs here. So I know for sure that market makers have people trapped in this area. So once these stops are raided, I will just sell. So we just wait. You just wait. Once, and already I told you, you would have a line here. You have a line. You would have a line here, a line which marks the weekly the weekly stop rate. So once price is between these two lines, the red line and the blue line, you would sell for a very good profit. You would sell because you know for sure that they have rated these stops and they have already rated stops here. So there is no way, it is very unlikely for them to come here, because if they come here, they will push you out of the market. You get a loss. You know that having rated stops here, because these people are always looking for food. This was the first food. They have eaten, they have come with their cars here. They want to go down, but before they go down, they come up to pick money, to kick these people out. And these people, the people I showed you earlier, the people that were trapped in this area during the previous week. That was phase one. And then they went down, they came up, they went down, they came up again. They had people trapped here. They fill their cars again. They don't need to continue to go. They cannot go up. They have every reason to go down in order to clear these stops here, clear these stops here, clear here, and fill this gap. This is a gap. This is a gap here. This is a gap. So at 15-minute time frame, I would see this gap here. This okay here. In fact, I would expect them to come all this far. And I stand to be corrected. Please watch the videos and correct me. This is where this as a patient trader, I'm trying to become one, by the way. This is where I would have my stop loss. Let us see if that would work. Because I see this gap, it's a gap. Because I don't expect market makers to clear these stops here and then come and turn around at this point. No, I don't actually expect that to happen, regardless of the trend or anything. And I expect them to clear this area. And after clearing this area, I don't see a chance of them going up. Once they come here, it is almost a must that they will come to clear this, to cover this gap, because this is a gap. It is a gap. There's a gap between this spike here and this spike here. Let us see if they would come that far. And did they come that far? Did they? Oh, good one. Did they? Oh, almost. Oh yeah, they did, and that is very, very wonderful. They did. How many pips? 63 pips. But you need to be very patient because of this. Yeah. So that is powerful, isn't it, people? I hope you will learn again today. Let me continue with my weekly journey. Now I'll not deal with intraday entries anymore. I'm just trying to stick to weekly stop rates only. That's the only thing I'll continue to do now. So if you have questions about intraday's stop rates, please keep them. We'll address them later. So we have high of the week here. This is our high of the week. And then let me continue. And okay, so the low of the previous week is here, and it is still intact. It has not been touched by price yet. Let me go. If I see a sharp move, that will mean a new low. Oops. Oh yeah. Now we have cleared these people here. This is very, very interesting. It's becoming very interesting because we have cleared these people here. What does that mean now? Can someone tell me? What does that mean? And we have cleared them. So I would say that at this point then, yeah, this was 30th. It was what was the day? 30th of August. 30th of August. Let me see. 30th of August was Friday. By Friday is when the low of the previous week was cleared. What do you do on Friday? You just wait for the week to end. You just wait for the week to end. You just wait for the week to end. Here, that is where the week has ended. We have a new law of the week. This law is almost useless, so I'll take my line here and put it here. And this week, I did a very wide range. How many pips? 195 pips. Oh my gosh, it was a very wide week, which means then that the following week is also going to be very wide, and which means that once we get the weekly move, let us try to once the red stops on this side, because 199, well, I cannot say that the new week which is starting here will be as wide as this one, but really once you see stops accumulated like this, they will come up to clear these stops. If not the new week, during the new week, they will come later during the other week. You see? And please note that there are also other stops which were cleared during the week. We have this. Oh, just a moment, please. We have these stops here. Okay. We have this. We have those, and we have more stops. Just a moment, please. Okay, we have this. Let me use an arrow. We have these stops here, and we have these stops here. They have been cleared. Yes, price was going down, and then they cleared this, which is okay. Yeah. Which is yeah. So this was low. It was cleared. Yeah. By this time, these people are officially out. And if you go down to intraday, you'll be able to grasp some pips as prices went down, and that is for another day, as I've said earlier. Because this, you would be able to see this fall from a 50-minute perspective, and then you'll be able to make some pips. Of course, in combination with higher time frame bias, H4 and above. Okay, so we have a new law. We have a new law, I'm not sure if I can call this whole area a stop hunt. I'm not sure. And that is why I want people to ask me questions. I'm not sure if I can say this is a stop rate, really. Because it's below this point here. Well, I'm not sure. I need your help, people. I need your help to help me to figure out if I can call this a stop rate. I'm not sure about that. But what do we expect to happen during the week? We want to see if price will rate these stops here. We want to see if price will rate these stops here. But if we conclude that this was a stop rate, it means then that price will fake it's going down, and then it will go up to where I see this area here. This is a gap. This was a 40 pips. This is a very obvious gap for me that I think market makers will try to come up and fill. It's a very potential area to be filled. Of course, as we continue to develop in trading, we'll be able to know what will make them come all this long way here. But for now, I would say that my take profit would be here. If I see a conviction on Monday, if I see a conviction of them going up, because we have already have a low here. Let me this was 2nd of September, but this is a stop rate. I think it will go up. And if it does, then this is going to be my take profit here. This area is going to be my take profit, as I've told you here. 40 pips, powerful pips. Even if it's the only trade that you take during the week, it's enough. 40 pips, 40 powerful pips. Of course, as you continue to get one trade per week, you continue to learn, you continue to consult more advanced traders, you develop you will be able to catch long moves. But at this point, be careful. If you're not an experienced trader like me, be careful. Control your trade. Control your appetite for money. Money will flow like water in a river. I assure you. Just try to master this. Use a demo account. Don't use your live money. Use a demo account. Try to master this. Okay. Let me go push and see. Now this is interesting. Now these people have been taken out. Now I'm sure. No, I know that there's no being shown in forex trading. It's very likely that now they will. No, let me see if this is a confirmed stop trade. Let me see. It's not sharp because I want a stop rate to be like this. Let me show you. I want a stop rate to be like this. Ooh, ooh. But if price comes up like this and then meanders around before going down, well, I really don't like it. And I think that is, you see, that is what happened here. That is what happened here. But even if whatever price goes, please put it on your diaries. This is a gap that will be filled very soon. Let me continue, push forward and see. So we don't have a so what are the market makers trying to do here? Let me pose that question. Of course, this is not a Zoom meeting. We'll make, as we continue to, if this community grows, we'll have Zoom meetings. And if you people want us to have Zoom meetings, please write in the comment section below. We'll find out how to have Zoom meetings to invite people, because mastering stop rates is going to make us able to master the market, kill the market. Now I'm wondering, what are the market makers trying to do? This is Monday, you see. Well, this Monday was clear because we saw stop rate, a clear stop rate here. So we already knew that it's very likely that price will go down. So this was clear. This was clear. But now here, this was Monday 2nd of September. We don't yet know what these market makers were. Because if they are going up, I would expect them to make a sharp move down and then come back up. That would be a low of the week, and then you look to buy from there. But so far, I don't see any sharp, any price spike down. Let me push. Yeah. Now this to me is a legit stop trade. This is a legit stop trade. Let me mark it. Let me mark this. See it here. This is a stop trade. It's a complete stop trade. This is a complete stop trade for me. So what do we expect here? We expect that price is going up. Up to where? Up to the gap that I mentioned earlier. For sure, this gap is going to be filled. That is going to be 79 pips. This gap is going to be filled. That means let us see here. Let me push forward and then you will see if that is the right call. And remember, the aim of this is not to be right. The aim is to make what? Make pips. Yeah, that was a good move. So we would have how many pips in the bag? We would have 75 pips in the bag. It's enough for the week. And you know why I love this? I love it because it's a move that is so strong and so sure. Well, as an interesting example, let me again go down to 15 minutes and figure out how we might have taken this. That is 3rd of September, right? 3rd of September. 3rd of September, where are you? I want you right now. This is where we are, here. You see, this is where we are, 3rd of September. You already know that on the 2nd of September, this is where did the market end. Okay, this was the 2nd of September. You know, this is, okay, just a moment, please. Yeah, this is still Monday, yeah, up to here. I've removed the period separator lines so that we get a clear picture of what is going on. So you have this here. This is 2nd of September. You have this, okay? Please watch carefully here. This is where the day ended, you see. And you have, okay, let us assume that you don't know what the trend is. You have stops here, accumulated here, you see, and okay, you have stop accumulated here, and you have stops here also. That is where you are now. Now you want to see where stops will be rated. If they go up and make a clear stop hunt like this one, you know for sure that we are going down. It's going to be a sell. Of course, this is in conjunction with a trend determination. I'm not telling you to use this as the only way for you to enter. If you practice it and you're comfortable, go ahead. But as a novice trader, I believe you'll use other tools like moving averages, like whatever else you have learned to determine the trend of the market. And then as an additional tool to confirm your trade, this is what you do. Second of September, this is where the day ended. You don't know what will happen on the 3rd of September, but this is a long move. This is a long bearish move. We know that we cannot have price just falling continuously. Whenever you see a long move like this one, you know that in a very near future, these people will push price up. That is for sure. So whenever you see such a long move, be prepared, regardless of time frame. Whether it's in 1 minute time frame, because price is a fractal. Prices are fractals. See, so you having seen this, then before you end the day on the 2nd of September, you put these lines here, and then you wake up on the 3rd of September. This is a 1 hour time frame. 3rd of September, I would wake up at this was 8. This is where I would wake up. I come up across a very interesting scenario again. I have more highs. I mean, I have lows here. See, by this time, I know that they have raided this area. I know they have raided stops here. It's very likely that they will go up. I know it for sure. See? And then now I want to find an entry. I want to find an entry now. I wake up at 8. This is where, because when you see this move, this powerful move, they are not, most of the time they are fake move. Look at this. Push down, push up. So if someone was a 1 minute time frame trader, he would make some pips here. 21 pips is a lot. See, if you are, probably, but I'm not. So here you are now. This sharp move down, you see it, you know this is a fake move. It has happened just before a London Open. You know it's a fake move, and already the bell starts to ring that we are going up, and we have this gap that I've mentioned earlier. I know price might come all the way up here, but the best area for you to take profit is a novice trader is here. You can exit 80% of your position here and leave the remaining portion, 20% running. Yeah. So I would draw another line here because this is a low here. So when I see price spike through this line and then up, that would be a confirmation for me to buy. No questions asked. That would be, even if I didn't go down to 15 minutes. At 13 o'clock hours in the afternoon, GMT +3 my time. Yeah, I would buy after this candle. Of course, there was a room for me to buy during New York also, because this is just before 14 o'clock here. This was 16 o'clock. So after this candle here, I would buy. A very comfortable trade. 18 pips for 88 pips. I don't want to talk about risk management. Please just do that on your own. Have your own rules for risk management. Yeah. So that's another class for us. Let me remove this. So in this one, I'm trying to go into more details after a few days of learning some new concepts. So we have a new high. We have the old high, and you have a new low here. Of a new low. Now let us see as the week progresses. That move would be enough for sure. That move would be enough. And then we continue. Of course, going intraday, 15 minutes, you would harvest a lot of pips after this first move. So continue. Yeah. Now we have something interesting again. This here. This here. This is a stop rate here. No, here. It's a stop rate. It's a clear stop rate before the week ends, which means we know that when the new week begins, let me put the line. The old stop, the old high is still intact. We cannot delete it because it has not been touched. Once it is touched, it becomes useless. I tend to be corrected. It becomes useless in my opinion. So we have to leave that line there. But right now we have a new high here. We have a new high. I mean, yeah, we stop rate and a new high. So we know that come the following week, we look for the market makers to, they may come up here when the new week starts, they may come up to clear these stops here, these people here, before going down. I hope you are following. So we know for sure that they will probably come only this far and then continue to go down here. Yeah, just a moment, please. Yeah, so okay, we have this. This is stop rate for sure. Okay, here's stop rate. So what might happen, because this is a very safe area, we know it. It's a very safe area, but these are minor, I would call them minor stop rates. So we expect them to come, probably clear these stops, but they will not come all this way. Let me put a line here. So this is our intermediate high of the week, of this week. Let us see what happened. We go again. I want to say that when the week begins, we don't know where they are going it, but we are ready for anything which they will do. Of course, we have stops here. Yeah, so they might come down, clear the stops, and go up. But this is a very prominent stop rate, so they may come down. Of course, these people have already been cleared here, and clearance of stops can happen just by a peep. Don't look for big candles. These people have already been cleared, but does it give a picture? Because I'm not sure if it gives us a picture of the week. Let me continue. Yeah. Here. This is where, okay, this is at 19 o'clock hours, GMT +3. It's deep into New York. It is confirming this is a safe place to put a stop loss, because you know this is a rejection. So they have cleared these stops only. They have not come this far. So if you are watching your charts during this time, you would be able to sell here. Sell up to where? Sell up to this area. But I'm not very experienced with trading during New York, because I don't know what happened after this. Probably they came up again to test this high during London the next day. So for me, I would only mark this as a new high, in a high of this week, which is not higher than the high of the previous week, and then look to sell based on this stop rate here. That is what I would do for me. Let me move forward and see what happened. Yeah. Now I think we have, what time is this? Yeah. Now look at this. Yeah, look at this. I told you, because what is the time here? This is 0 o'clock hours. This is during this is GMT +3. I told you I expect them to come to test this high here, because this high has come to clear away these people here. It has come to clear this, kick these people out of the market. So when the day ends here, where does the day end again? When my day ends here at 0 o'clock here, at 0 o'clock GMT, I expect to be able to check my chart at 0 o'clock GMT here. Once I see what has happened during New York, it would tell me that, well, it would tell me that when the London market opens, they will come up to clear these people, but not here. They will not clear this. This is, to me, this is the high of the week. It's a high of the week. I wouldn't, I cannot use this as a high of the week to sell very far up to here, because this is a gap. I see this gap which will be covered very soon. But I cannot use this high to come this far, because I mean, for price to come this far, I need them to temper with this high here. But if price comes just this far, I cannot sell and put my take profit here. No, I cannot do that. I wouldn't do that, because price is like rubber band. You pull it so much, it goes so much. So let me see. So at London, we would expect to sell up to where? Sell up to where? So when the day ends here like this, I know for sure that tomorrow I will sell. I'll make money. I know that price will come up to here, and then I would expect them to come this far, 49 pips. That would be a very safe exit for me here, 49 pips. Here. You ask me why. That is where I expect them to come, because we have these lows here. We have these lows and this low here, which is very close. And then, okay, I wanted to mention a gap, but I don't see it. But well, that is what I think. That is what I think. I think they will come just up to here. If they come all this way, well, good for them. But by that time, I would be out, because, as I said, I don't want to think about this gap. Unless they temper with this high. Okay, let me continue. Let me push forward. London. This is what happened in London. This is 10 o'clock in the morning, my time. I would sell here. My take profit would be here. My stop loss, sorry. And my take profit would be here. For 35, 36 pips. To me, that is not bad. It is very, because this is a very powerful setup. It is a very powerful setup. It's a powerful setup. It is a powerful setup. Yeah, see, this is another stop right here. Here, you wake up in the morning. This is 8 o'clock my time. This is when I would wake up. I look at the charts. I find that they have done some damage here. This candle has cleared these people out. I know it's a small sell. I would look to take it. How would I take it? Because this is 9 o'clock. This is 10 o'clock. See, this is 10 o'clock. I would buy here, put my stop loss here, and then ride it up to, because I would expect them to clear this stop, so I would put my take profit here for a very safe exit. See, for a very safe exit. With more experience, we'd be able to capture this. We'd be able to buy after closure of this candle, because this is 10 o'clock. We know that market makers will fake to go up, come down before finishing their clearance. So on Monday we would make some pips. This is a very strong setup, I'm telling you. Whenever you see them, whenever you find out that they have cleared stops, it's a very, very strong setup. Take it without fear, like this one. You wake up at 8, yeah? You wake up, well, you see this, okay, they have already cleared stops. You wait to buy. When do you buy? During London. When is London? Yeah. Oh, this is 8 o'clock in the morning. That's when I wake up. I buy here. I put my stop loss here, because I know for sure that in the short term, I insist, in the short run, they will not come to clear this area. I know in the short run, I repeat. So I'm saying in the short run, because don't come put your take profit here and then blame me. No. You buy here, you put your stop loss here, you put your take profit here, because you know for sure that they must come to clear these people out. That's all you do. And then you go to take a cup of coffee and enjoy the rest of the day. So we would sell here, and unless we cannot expect a strong move during the week unless they temper with the high or the low of the previous week. Please write that down in your diaries. If they don't temper with this, we cannot expect strong moves during that week. That is what I think. I stand to be corrected. I'm still very young. I have my friends who are very experienced traders. Probably they come across this and watch it also because I want to learn from giants. I'll mention them another day because I'm very grateful to their help. So sell here. Let us see if we'd achieve our goal. It was a difficult week. So far, our stop loss is still intact, as we have mentioned earlier. Our stop loss is still intact, and that's what you want, right? Yeah, to the pip, to the pip, to the pip. That is sweet, isn't it? Yes, you have how many pips here? You've already made money here. You've already made money here. Here, you have made 16 pips. Sorry, 38 pips, and then you make again how many pips? 23, 33 pips. During the week, you are done because this is not. It's not going to be a smooth week for sure. It's going to be a ranging week. Okay. You continue. And don't regret if you see powerful moves. Don't regret it. You see what they were trying to do, these people. Shame on them. You see what they are trying to do. They were trying to, because there was news. Let us assume that we have not seen the huge candle. But by the time this huge candle, it comes up, you have already made money. You're out of the market. Of course, this was 10th, 11th, okay, 11th, 8 here. Okay. So this is a stop trade also, but no, we'll talk about that during the intraday stop trades. This is okay. So that they are trying to hold price because they didn't want to show their intentions clearly. See, and then suddenly you have this during news. Now imagine if you had put your stop loss here. I told you, you sell this candle, you put your stop loss here because this area is safe. This area here is safe. You don't expect them to come to clear this anytime soon. So you put your stop loss here. Imagine you had put it here because you don't want your, and then imagine you had put your, because I mentioned this gap, didn't I? In fact, it was also covered during the down move, but we don't care. We are out. I said that I expected them to come down to clear this gap, having touched the tempered with the weekly high, but they decided to come now because I'm also learning people, and they came to the pip. They covered the gap to the pip. You know what you can do is to put your first take profit here for say 80% of your entry, and then the 20% you put your take profit here. And let me tell you guys, no regrets in trading. If you lose money, no regrets. If you lose pips, if you put your take profit here and then the price continues to go down, no regrets also, like here. So this was the right call. Okay, this gap. Okay, now this candle is very interesting. It is very interesting. It has created a very clear scenario, and that is one reason why I decided to repeat this tutorial using the same chart that I used last time. Let me show you guys. Very interesting. This is a stop rate. Well, in the previous tutorial, I mentioned this is an inefficiency in the market, which is true. But in addition to that, this is a stop rate here. When they came down, they cleared these people. You ask me, okay, what about this? You told me, okay, so how would you capture this stop here? You would capture it on the 12th because this is 12. This is 12. Okay, this is 11th. This is where the day ended. At night before you sleep, you should know that this was a stop rate because this stop has cleared these people here. One, this, let me show you. We should be able to know. Now that is intraday stuff, which I'm not doing today. You should know that this is a stop rate, one. And two, you should know that on the following day, there are going to be strong news which will shake the market. That is your business. You should know. I'm saying so because at 11 o'clock, you might have sold here and put your stop loss wherever you put it, and then it would be washed away. You see. But at least this this stop right here told you that, okay, this is 11th. This stop right here told you that on the 12th we would go, and that is what happened, people. Look at this. Very interesting indeed. This is 9 o'clock in the morning. So when you wake up on the 12th, on the 12th, this is 8 o'clock my time here. This is what you come across. This is what you see on the chart here. This is what you see. You see here, you see this candle. This is 8. You can buy this candle. Why not? You buy it, you put your stop loss here for 28 pips. You tell me that that is very wide. I say yes, okay. We have these stops here. This is this, we call this clean highs. We have them here. We know for sure that they will leave this area and they will come to clear all these stops. So you have 52 pips for free. News, you know what news normally does? News are a very useful tool for smart traders because they will push price towards your area. So news will make you finish this trade within how many minutes? Within a very short time, you are done. Because see what happened. Poop. Within a very short time, you are done. You are done. You leave, and then when the market makers push price down, you're already done. You close your bag, and then you're good to go. But I will not talk about this today. I'll do this intraday stuff later. Please keep watching this on this. Okay. So we have two things here, guys. We have two things. Okay, what do we have here? What do we have here? Let me show you. Okay, this high, look at this. This is for another day. It is still intact. And then we have this. Let me show you. This, oh no, let me hide this. Okay. This to me is a stop rate. This one here. So look at this. This is actually what convinced me to repeat this tutorial. We have this stop rate and we have this stop rate at the bottom. What does that mean? We know for sure that when the week, okay, and this is when, what, you know, this is 13th of September. What was this day? Let me check here. 13th of September was it was a Friday. Okay, Friday, market makers have told you that when the new week starts, we will go down. We will go down. That's a very clear message. And down to where? We have this gap here. This is a gap. This is a gap. We will cover this gap up to here. I'm telling you where the new week begins. We should look to sell and put our take profit here. How many pips? 100 pips. And that is why, this is exactly why I repeated this, because I noticed that during my previous tutorial, I did not highlight very well on stop rates which happen at the top and at the bottom. So this is a very typical example of that. Let us see what happened during the week. And then after this, when they come here, when they come here, when they touch this area, they will go up again. So you have two trades. You will sell here, and then you wait, they test this area, you will buy again. See, how many pips do you have? 69 pips. Okay, let us see what happened. Push, 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 push. Okay, so when the week, so if you have a week which has ended this way, you know for sure that when on Monday you just look to sell, no questions asked. And this is what happened, because this is 4, 5, 6 in the morning, 7, 8, this is 9, and this is 10. Look at this, very interesting, very interesting. Let me show you. These are stops here. You have stops here accumulated here. Look at this, people. Look at this. You have two things which are supporting you to sell this trade. One, you have the spike, I mean the stop trading which happened during the previous week. That is one. What do you want to see now? You want to see an intraday stop trade which will help you to sell during and make money during when the London market opens on Monday. That is quite clear. Quite clear. And that is what you get here. Because when you wake up, when I wake up at 8 o'clock in the morning, GMT plus 3 is my time. When I wake up, this is what I see. We have equal highs here, and then we have this stop rate here. This stop rate here, I'm telling you, this is money. Because at 8, at 9, this is 9. What do you wait? What are you waiting for? If you want to be very very smart, for example, here at 8, why don't I sell here at this candle? Because it is small. How many? Because what I want to teach myself the way I want to be able to trade is I don't want to be very economical with pips. Here, how many pips do we have? 19 pips. I know for sure that if I sell here, they will not come to clear this stop before coming up to this point. That is certain. No, not here. Here. This is my take profit, okay? So why don't I sell here and then go play golf? Here. Okay, alternatively, you can wait because because you know for sure that at 8, if we are here at 8, you know, this is London, this is 9. You know for sure that when the London market opens, there will be some pullback towards this red line before they go down because Londoners wouldn't want to sell when price is very high. Let me show you one thing. When we are bullish, this is USD, right? When we are bearish, let me show you. When we are going down like this, it means that USD is falling, see? And Euro is rising, okay? So, USD is falling. So, a Londoner, if the market makers are going down, they wouldn't want to sell, and if they have rated stops here, they would want to sell, to go down, to sell when price is as close to the stop, to the point where they rated stops as possible. But price will definitely not touch the line, okay? So they will push price up a little bit and then go down. So if you want to be very mean, with pips, you wait because you know that at 10 they will surely come up, and that is what happened here. This is what happened because I might have sold here, I would have risked 20 pips. But if I waited, if you don't have something which is, if you don't have a trip on that day, you have time to wait. If you have time to wait, you'd wait until 10 or about 10 and then watch your, as price develops, as this candle develops, after close of this candle, as this candle develops, it will go up. Once it is up here, how many pips? 13 pips, you sell, and then you go to play golf or do something else that you want, okay? I hope that is clear. So let me remove this. See, this is becoming very interesting, isn't it? Looking for weekly stop rates and then looking for daily stop rates, giving you very high probability trades, okay? Okay. So then we go. We know that I've said that this is going to be our take profit. Let us see if that is what is going to happen. Oh my gosh. To the pip, guys. To the pip. This is very interesting. This is awesome. And that is why I repeated it, because I wanted us to be able to see this clearly. You see? Very, very powerful. Very, very powerful. You see? And then I told you, once price has arrived in this region, we are looking to buy because this is also a stop rate here. This one is a stop rate. Okay? This was a stop rate. This. In fact, we have two cases here. We have two stop rates here. Before this one was a stop rate. Let me show you guys. This one was a stop rate here. This was a stop rate. Let me put a different color. This was a stop rate. And then you have this. So you know for sure that this is going to be a buying area. What are you waiting for? On the 16th of September, you wake up in the morning. Let me show you people. Okay, here. You wake up in the morning. You wake up in the morning. Okay, this is 16th. Okay, F12 again. F12, F12, F12. Yep, here. Here. 7 o'clock in the morning. This is where price is. Okay. What will happen after this? And you know for sure that they will not come because you have stops here, you have stops here, you have stops here. Look at this. This is a now this is what I call a intraday stops. You have stops here, you have stops here. You see, you have stops here. Very interesting, guys. You have stops here. Okay. Just a moment, please. Here. Here, you have stops here. And why? When do you see that? Just before London. Here. This is 7. This is 8. Just before London. See? You see stops here. During the previous tutorial, I mentioned this as an inefficient market here, which means then we have, if we buy from this area, I see this as a very good place to put our stop losses here. So this is at 6 because you see this stops accumulated here at 6, 7, 8. What did they do? They pushed the price down, took these people out, and then they let us see what happened after that. Why is our take profit? My very, very, very good area to put take profit is here, and no further. Why? Because I see this gap. I just want to catch this gap, and then I'll be done for the day. Why should I be so greedy with pips? Oh, I know that after this, price might go up to the sky, but I don't care. I've made what I want. I go off the market. You see? Here. Okay, let us see what happened. Let us see what happened. Very interesting. This is awesome, isn't it? This is awesome, I tell you. This is awesome. Done for the week. I wouldn't do anything else during that week. Of course, there's a lot of intraday trading here, which I will not cover today. Let us save that for another day. Okay. Okay. When does the week end? Here. This is where the week ends. Here. What do we have during this week? We have this. We have this. Wait, just a moment. We have this. We have our new stop here. We have a new stop for this week, and we have so that is a swing low, and we have this swing high here, which is important. Why is it important? Because they use it to take these people out. See, they use it to take these people out. So this place is a very important area. Let me mark it. It's very, very important. It's a very important area, although it is small. Size doesn't matter, okay? It's very important, this area. And here, this place is also equally important. Why? This place is also important because they took out these people here. See? Although they failed to take out people in this area. See, what do we want to see during when the week starts? Since we have this low of the week intact, you want to see how traders will, whether traders, and as I've told you earlier, we expect powerful moves after they have tempered with lows and highs of the week. You see, that is what we want to see. Okay, so let us see what will happen during the week. So we have this low here, which is a very powerful top. If they come down and show rejection around this area, we'll know for sure that they are going up. And my powerful destination is here. It is here. How many pips? 20 pips, because I see this gap. I see this gap in a week like this, which was very shapeless. Well, we can expect them to go this far. We can expect them to go this far. You can also use higher time frame. You see, I'm not going to any other time frame in this case, but you can use higher time frames to determine your exit places. Please feel free to do that. This should not replace your trading strategies. So let us see what will happen when the week starts. We have this low here and this low here. I push. Yeah. Oh, okay. Interesting. Very interesting, because now we have to be very smart. We have to be very smart, because whenever you see equal highs, you should be very careful. We have these highs here. Here. We have these highs here. I hope you see them. Okay. You have those highs. See? And then, of course, in conjunction with your high time frame analysis, you might have been able to know that the new week will be bearish. We have these highs. So what would you do now? Here, this is intraday stuff now. I'm betraying myself because I said I would want to do this today. What is the time here? At 7 o'clock, 8 o'clock, you wake up in the morning, you come and find out that these guys have taken these people out of the market. And that should raise an alarm to you that these stops here and these stops here are at the risk of being blown out of the market. That is one. And two, it should tell you that a major direction during this week probably will be bearish, because the move down is going to be a fake move. Okay, let us see what happens. So we know that. So once you know, once you see them having taken these stops here, you start to be in a sell mode. You see, and then you say that, okay, my take profit is going to be here, because whenever they take stops, they'll go to the different direction. How many pips here? 25 pips. And you know for sure that if they take these people out, they will take these people out. And if they'll take these people out, you know for sure, almost for sure, that they will cover this gap. Let me show you. This gap will be covered here. If you want me to talk about these gaps, please tell me in the comment section. I'll put it in I'll prepare that tutorial after having learned about gaps. Well, so we have how many pips? 47 pips on Monday. You see, because if they come this far, they will surely come this far, and if they come this far, they will surely come down to cover this gap. You see, let us see, and we still don't know direction of the week. We are yet to determine that. Okay, we go. Okay, the first time. Okay, yeah. In one candle, they have cleared this thing here. Now, since they have cleared the low of the previous week here, we know that probably now, okay, so this low is still intact. Let me see if there was a clear rejection upward, and then that will tell us that we are going to buy. Okay, I think that is a clear northern rejection. So I know that we are going up. This here, this is another stop rate. Let me show you guys. Let me show you. This is a stop rate. Whenever you see a move in the market, when you see a visible move in the market, let me tell you this, write it down in your diaries. When you see a visible move, when you see a candle like this, it has already become a fake move. Let me tell you that. When you see a move like this here, because you know a novice traders normally they will sell here after this candle, this bearish candle, they will sell here. What would happen after that? You sell here because you have seen this strong bearish candle. You say that, well, price is going down, and then you press sell. You put a stop loss somewhere here. See, you will be taken out by this candle. Okay. Okay, and then you call your friend and tell your friend, okay, price is going down, please sell immediately. He comes and he sells here. Put your stop loss somewhere here. This candle will take you out. So what you see a candle, that move is already fake. Be very careful with that. We want to, for example, here, once you see them, once you notice that they have unseated these people here, you already stay in a sell mode. Okay, for example, I would sell after closure of this candle. Where would I put my stop loss? I would put it here. Here. I would put it here. 13 pips. That is where I would put it. Because I know you see this candle, that move is already fake. Why do I say that? See what happened after close of this candle. See this up move here? This killed a lot of people. This 2-pip move. And that's why I've told you that you see this candle, that move is already fake. Because they fake people all the time. So you sell it. Since it is fake, how do you protect yourself then? You protect yourself by putting your stop loss in a proper place, one, and then by entering on time. You see, you enter on time, you put your stop loss in a safe place. And I think you know that most of the time when you press a buy or a sell, price will go against you for a while before continuing in the correct direction. And it goes against you because it's not only against you, against the trading world, because people lose a lot of money during these fake moves. During this, for example, here, people lost money here, from here to here. People lost a lot of money, millions or billions of dollars are lost here, and then price went down. If you put your stop loss here, you are safe. Now, if you sold here, when you saw this candle rushing downward, you sell here. Where do you put your stop loss? You would probably put it somewhere here in the middle. You see, you'll see yourself being kicked out as we continue to move. So, well, this is a stop rate, as I've said. This is a stop rate. So, as the week progresses, we are looking to buy. You see, but this low here is still very. It is very obvious, and obvious things are very dangerous in the market. Whenever you see something obvious, you have to be careful. This is too obvious. So anytime soon, I'm telling you, they'll come for these people who are trapped here. Watch out for that. But for now, in the interim, and that is important, because if you are greedy with pips, if you put your take profit too low, too far, price will go up. You see you see yourself in a good trade, and then since your take profit is too far, they'll go against you and you lose everything. Okay, so let me push forward and see how we might have entered here. So we have this now. Oh, this was a Monday. Okay, let me go until when the day ends. Okay, this is Monday 20. Okay, this is 23rd Monday, and this is 24th. 0 o'clock GMT plus 3 is my time. Now we know for sure that tomorrow it is a buy day. Okay, let us go until London and see. Okay, London, where are you, London? Is it London? Okay, I've pushed it too far. Okay, here, look at this, guys. Look at this. This is 10 o'clock in the morning, London time. I think I would buy here. Because I don't need to wait for confirmation candles. Confirmation candles, I wouldn't wait for that. I have this bearish candle here. I would sell here. I will buy here. I would put my stop loss here. Do not be too stingy with your stop losses. You'll remember this, guys. You lose a lot of trades if you are too stingy with your stop losses. Okay, where are we going from here? Let me see. This is 10 o'clock in the morning. I buy here. My take profit in this case is where I see them coming up clear, because this is a gap here. See this? This is a gap. Let me hide this. This is a gap. I see them coming to cover this gap here. that is 14 pips. So if I put my stop take profit here, I'm sure that they'll come to hit it. And after they have cleared this gap here, I see them coming to flush these people out also. You see here? And after they have done that, I see them coming to cover this gap. Well, I cannot go this far. That will be too greedy for me. That will give me 50 pips. It is enough for the week, not even for the day. You see? The preceding week was not that beautiful, so it is making trading difficult. So let us see if that will be the case. So I've said that I see them coming here, and you can have multiple take profits. That is not bad. I see them coming here. Let me change this color. Let me make it red. I see them coming here. Let me make that red. Okay. Now let us see if they will come that far. We are safe so far. Safe, safe, safe. Oh, safe, 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 safe. Oh. Now I'm a bit scared. I don't know if they'll hit the second. I'm not sure. Let me stop there. Well, it's up to you. But after entering here, really, I think this is 26 pips. These 33 pips are almost guaranteed. And these highs here, I mean, okay, these highs are very obvious, but it's up to you to decide. Of course, you should do this in conjunction with higher time frame direction. If you go to higher time frame, you'll be able to know whether you can, whether this take profit here is realistic or not. But I'm telling you, this gap here will be filled very soon. And I think if you had put your take profit here, you would have lost. I would urge you people to split your take profits, because if you make because this is very obvious. This is very obvious, guys. This is very obvious. These 36 pips, 38 pips are very obvious. Oh, here, 31 pips, very obvious. You see, because they cannot sweep here and then continue to go down. That, well, I don't know. I don't want to say it has never happened, because life is full of probabilities. But then you could have put your take profit here, 31 pips, and then you're out of the market. Because after all, I like the move down, but I don't like the move up. The move up has a lot of wicks. So probably that is a warning sign to you that you shouldn't be expect the second take profit to be hit. Let us see what happened. Maybe I'm winning for nothing. We go. Oh, yeah. So if you had put your take profit here, you would have lost. No, not yet. Then the take profit has not been hit yet. But even before I continue to push down, I think this take profit did not survive. I think it did not survive, because this candle is too close and it has nowhere. And they cannot come all this way and then stop here. No, it's not possible. And the candle is too bearish. They will not stop here. So definitely this stop was cleared. Yes, see that? So if we had put a take profit here, would be safe. Would be safe. So let me continue. Now let us see how the week ended, and then I will skip this presentation. I want to see what happened during the week, which ended yesterday. That's what I want to do now. Okay, here we have this. So this is our new high of the week, and this is our new low of the week. Let me do this week last, and then I'll skip to the week which ended yesterday. Yesterday was Friday. Okay. Because I don't want this to become too long. You'll find it boring. Yeah. So let me do this week. Okay. So we have this. This is a stop rate, guys. I believe by now you already have this. This is a stop rate, but I don't like it. I don't like it. And the significance of this is that it has taken out this giant who was sleeping here. And okay, you should have a line here. This line should be intact. A line which marks any stop rate which has not been taken out should be in your charts. So here, once I see this, I know that this stop is still alive. It has not been taken out. Here, it has been taken out, okay? So we have a new low of the week, and we have this high of the week here. Let me show you guys. Let me show you here. We have this high of the week. And you know what I've just noticed? These people are very, very tricky. This here, they cleared these stops here. You see, they cleared. So this was a sell week. Imagine this was a week to sell. This was a week to sell. Just for illustration purposes, let me go to the week of 24th of September. I want us to see how we might have survived, how we might have grasped that sell trade there. 24th of September, it's here. 24th of September, where are you? 24th, 24th, 24th. Okay, look at this, guys. This is 20th, see? I don't know how you determine trend, but you see, this is a, this is a break of, this is a break of market structure. This is 20th, okay? This is 20th. This low was taken out on 23rd. You see, it was taken out on 23rd. And then, so, okay, on 20, okay, on 23rd, this low was taken out. That is a strong indication to you that we are going down. You see, that is a strong indication to you that we are going down. So you just look to sell. You just look to sell here. You just look to sell. Let me mark this area here. Okay, you have this. Then here. You have this. I'll explain why I'm doing this. And then okay, see that? So obviously this was a sell week. So you have to combine things. You shouldn't just use one perspective in trading. You should combine factors. This is break of market structure. You have break of market structure here. So you know that this week is, I mean, the next week is going to be, no, the break of market structure, when was it confirmed? On 23rd, midnight. This break of market structure was confirmed because price came here and broke this. Yeah. So we just look to sell in the following week. Okay. Yeah. Okay. Yeah. So now let me skip this. I'll finish by doing the week which ended yesterday. Yeah. Okay. Second. That's first. Yeah. First. Yeah. First. Okay. Second, it was 28th. Today on 28th. 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 Okay. 28th here. 28th is where. Okay. So on 25th, it was a Friday. Okay. We have a breach here, a breach of these stops here that happened on 25th. On 25th here. Okay, let me hide this here. So on 25th, you have breach of these laws here. We don't yet know if it is a stop rate or not. Let us wait for the week to start and then we'll know. Yeah, that is a stop rate because price came down and then went up almost immediately here. Yeah. This is where, so this is where our the stop rate was confirmed. So what would you do? You look to buy. Okay, we look to buy. So we want during London we expect, because this was fake. See this this was 28, 7, 8, 9, 13 o'clock hours. This was fake. So after closure of this candle here, we would buy. In fact, I took this trade. After closure of this candle, we would buy. We buy. Just a moment. If I buy here, my stop loss will be, no, this is where I would put my stop loss. How many pips? 22 pips. Okay, 22 pips. Okay, where would we go? Okay, you have when we leave, because see this is long move, so we expect them to come all the way here, because this is a long bearish move, and see this inefficiency here. So we would expect them to come all this far, and of course that is what happened. That is what happened. Yeah. On the, well, guys, you have the right to miss trades. You shouldn't be painful to you when you miss trades, because if you teach yourself to wait, you'll get very good setups. Look at this. This was okay, this was 28th. That is Monday. Okay, during New York. Now, and one thing I told you, that it is okay to miss trades, and the second thing that I'm going to tell you is that do not ever expect a major move during New York session. I tend to be corrected. That is what I think. Look at this. This was, well, it looked like a buy during New York. This was 16 o'clock hours, 17. Okay, it looked like a buy. But do not expect, if you see price going up like this during New York, here, you see price going up like this during New York, it is very likely that the up move is fake. During London the next day, because you know what happens before people. Okay, let me show you. This is London, see, and this is New York. Okay, price is here. Okay, and then prices will go down. I mean, say price was going up like this, and then it went down, and then it went up. A person who sells, I mean, a trades during London would like to buy. Okay, market makers during London would like to buy. They cannot buy on prices here. They will pull it down a bit. How do they pull down? They take profit of their trades, you see, and by taking profits, price will start to fall, and then that will induce you into selling. And once you sell, they continue to go up. They can't buy when price is here. They cannot do that. The same applies to New York. They don't sell when price is moving. They put it to sleep first. It's like you. If you want to board a bus, it has to stop. You cannot board a running bus. Okay, the same applies to trades. They will pull it down. They'll make it sleep a little bit. And when they make it sleep a little bit, when you look at price and you don't see it moving, you become bored. and then you make rash decisions. That is what they want. You see, they are always fooling us. They'll fool you into thinking that, oh, I've heard people saying that, well, this week is very quiet, the market is not moving at all. That is what market makers want you to think. They want you to think that the market is not moving. And then all of a sudden, they start to move, okay? So they will always bring things back. They will always push price down before going up. And that is what happened here. Let me show you. Let me show you. Let me show you. Here, look at this. During New York, well, this is a buy. This would be a buy here. You might have bought here. This is New York, yeah. But a major move during New York, never. So when you see a buy like this during New York, during London the next day, they must come down. They must come down before now leaving for good. And that is what happened here. During New York, you can only trade short pullbacks. Well, I tend to be corrected. I'm a very novice trader. I know you people, some of you have far more experience than I am. Let us see how this week ended and try to determine what might happen next week. We are not prophesying. We're just preparing ourselves for a scenario which is favorable to us. Okay? Here, this is where the week ended. Okay? Okay, let me mark low of the week. The low of the week is here, and high of the week. High of the week is, okay, just a moment, please. High of the week is here. Here. This is where the week ended. And please take note that this high of the week has not taken out the high of the previous week. So what do you think might happen? They may come up to, because this is our people, there are people trapped here. You see. So when the week starts, I think it is very, very likely that this high will be cleared. Yeah. I think they might go up, because let us mark equal highs that we have. We have equal highs here. We have equal highs here, and we have equal highs here. See, and here, and here. So that is where. So if they come down, I'm telling you, if they come down to clear this area, I mean the next week, we just look to buy. If they come up to clear this area here, it is very likely that they will come to kick these people out. And if they kick these people out, these people will be at risk, because we don't expect them to come so suddenly. So we cannot say that it's going to be a buy week or a sell week. If we had seen a clear-cut stop rate, probably we would be able to say so. Let me go a little bit up in time frame and see if we can get a clear picture. Yeah, I think we have it. Wait, but no. I wanted to say that this is a stop rate, but it's not beautiful. It's not beautiful. It's not beautiful. Yeah. Okay, this is a stop rate. Yeah, this is a stop rate. For sure, this is a stop rate. I think it is a bit dirty, because the last week, the week which ended, was an NFP week. So, what do you expect to see next week? Let us wait patiently to see how they will dance around, because we have stops here, as I said earlier, in this area, and here, you see, and here we have stops here. So be very patient, be very careful. And here, stops, see? So if they come up to okay, if you see a clear rejection, you remember I told you to look for intraday stop rates. Look for an intraday stop rates, which I'll not do that video today, but wait for that. I'll prepare it and post it. So if you see a clear intraday stop rate, if for example, if they don't come up to clear these people here, and then you see a clear intraday stop hunt high. I mean, if you see something like this, okay, let me draw it for you here. For example, this is what we see right now, okay? This is what you see right now. And then on Monday, you see something like this. Okay, at 10, you see them going up like this. You see them taking out these people here. Just to sell. Yeah. This will be a sell. I tell you it will be a sell, okay? Yeah, so that is scenario one. Alternatively, if they take these people out, also it will be a sell, probably. I don't know. But combine this with your knowledge on doing multiple time frame analysis. But at this juncture, this is what I think will happen. What might happen if you see an intraday, a clear intraday stop hunt, sell for few pips, because Mondays are not that good. You know, I repeat, if you see a clear intraday stop hunt, sell. Okay, sell for few pips. For example, you can sell from here, from around this area, and take profit. Say, okay, because if you sell here, if they come this way down, they'll definitely clear these people out. So I would say that they may come all this way down. You see, but if they live here, if you see them coming out to clear these people here, if they clear these people here, that will be a buy for sure. So just be prepared for any scenario. Okay, yeah, guys, it was a bit long, but I hope you learn again from this. Please, if you have questions or comments, please put them in the comment section below, and if mention any topics that you want us to cover that we have not done. I might not be conversant with what you are with the topic that you'll mention, but it will help me to know what else I need to learn in the future. But for now, I would strongly advise you to go through your charts and try to do what I've done in this tutorial. Go through the chart, just go through it